Hello, this is Ahura with you to review the central banks meetings in United Kingdom and Europe. While geopolitical tensions and outlook, or we can say better, we can say, the annual and the quarterly outlook after earnings reports, putting the pressure on the stock markets and making them to lose days after the days in the recent days in this week. The central banks also, they didn't make such a decision that we can say, okay, that decision could be supportive for stock markets. Geopolitical tensions in the Middle East growing at the day 40 of the revolution in Iran, while tomorrow everyone looking at tomorrow's negotiation between the Islamic Republic based in Iran and United States. Let's see what's gonna happen. The risk is high, and that risk is one of the negative elements in the market, especially for the stock markets. On the other hand, the earnings reports we had so far, even thought some of them, the most of them actually, we can say they had a much better EPS and revenue. At the same time, their outlook for next quarter and for whole year of 2026 is not good, is not brilliant. And some of these tech and AI-based companies, AI-based stocks, they are firing their the employees, and that's increasing the risks in the market and the concerns in the market. Will these AI and tech-based companies are really, the price based on the real stuff, or they are overpriced? That's the condition, and let's go now check the markets, check the central bank's decision. BOE and ECB, both of them, they held the rates at the current levels, 3.75% for BOE and 2% for ECB. None of them, they didn't have projection in this meeting. The next meeting, we will have the economic projection. So in this meeting, we didn't have a projection. So what market looked at that? This is about the BOE. The market was focusing mostly on the votes numbers, while mostly the market was expecting 2 votes for rate cuts and 7 votes for rates for holding the current rates. 4 members they voted for rates cut, and 5 members they voted for holding the current rates. That was the market overall reaction, but we talked in the weekly outlook. If you remember, I told you what I do expect is 4 by 5, the same thing that happened, because 4 members they were already talking about cutting the rates. We had 4 members that they had a doubt on what to do, and 1 member it was not clear. Mr. Biddy, the BOE governor, in the past 2 weeks in his speeches, we didn't really understand what he wants. What he were talking about, it was mostly about the dovish decision and cutting the rate. He was talking in this way, but when they were questioned about the rates, mostly he was giving the answer that he is kind of the supporting of the holding the current rate. So that's why that was something between them, just like holding the rates or cutting the rate. That's why the market had just like doubt and concerns on what will happen and what is going on there. So that's what's happened there, and that's what's the things that happen in the market on the United Kingdom and in Eurozone. Central bank, they somehow ignored the yesterday's inflation. We talked about that, why they can ignore this. They ignored mostly because, first of all, yeah, that was the first time we saw that inflation in the recent years in such a low levels, and there's no guarantee that will continue in that level or not. But at the same time, the thing is that while we have this situation there, the market is also at the same time the East European Central Bank doesn't have too much such a big door. I mean, the room, or we can say, doesn't have much rooms to cut the rates. That's why decision of cutting the rates further can be a very hard decision and should be based on the real the evidence on the market. So for now, the inflation is low. Why? The economic movements somehow stable, but it's not such a good stable. I mean, it's stable mostly in negative territory. It's not stable. It's not stable in a good way. At least we can say what the positive side of this being the European economic being just stable. The positive side of this stable is that it is stable on the way that we can say, okay, it's not going to fall further. That's the only positive side that we can see in the European economy so far. As mentioned, they had no projection in the statements or generally in this meeting. That's why we didn't have a surprise in the statements as well. Both Bank of England and European Central Bank, they both they repeated the commitment of holding to bringing the inflation down towards 2% and holding around 2% and things like that. Always the things that they're always talking about, and we didn't have something like surprising stuff in the market. So that's what happened in the decisions and in central banks and the markets. As the market reaction, if we want to check the market reaction, how the markets reacted to that, we can go first check with the charts. That's the euro USD chart. While Europe is counting on a maximum one rate cut in this year in 2026, we are expecting at least around two rates cut from the Federal Reserve, which means for 2026 the Eurozone or European Central Bank will be a little bit more hawkish compared with the current situation that Federal Reserve has. That's why the market generally expecting to see the Euro USD above 1.15 for whole year of 2026. And at the end of the year, they are expecting the market expectation generally is around 1.19 and 1.20 for Euro USD. That's why if you see the rates, if you see the prices around this, don't be shocked what's going on here. That's what's happening and what's the market expectation. However, if we see one more time the inflation in such low levels of 1.7%, 1.8%, or even 1.6%, which means the European Central Bank can go further and cut the rates earlier than expected. That could be negative for the euro against its cross, especially against USD. Otherwise, we do expect the euro USD to continue in these levels around slightly higher level, but not much under 1.50. That's the overall expectations for the European stock market. Most of the European stock market, I mean the DAX, Euro Stock 600, Euro Stock 600, Euro Stock 50, all of them, they are negative. And they are following the same trend that we had in Asian market, and we have, as you can see, in S&P 500, Nasdaq, and the Dow Jones. We have the same trend in other markets, mostly led by geopolitical tensions and AI and tech-based companies, which I explained at the beginning. That's why the European markets doesn't matter in the Eurozone, or even if you talk about if you look at the British market, UK 100 is the same. They are following the overall market trend, as in the central bank's decision also. They didn't have something that can say, okay, that decision was such a supportive decision, and it can hold this downtrend that it is going on in other markets. That's why it was not such a big decision to say that, okay, I mean, that's surprising to say that, okay, it's going to be supportive for the stock markets. So since we didn't have that, overall markets is following the general trend in the market, which is following right now. The reason is the same, which I explained. And the cryptocurrency in the market, in the forex market for the GBP USD as well. For British Central Bank, we do expect more rates cut this year compared with the US Central Bank. That's why, which means the BOE will be more dovish comparing the Federal Reserve. And while the British economy is in a weaker condition compared with the American economy. That's why GBP USD mostly should be negative. Even thought last 2 weeks it was gaining some, but generally GBP USD is in side movement with the downward tendency in the market. That's what the market expecting, especially if the next week, if in the next meeting in March 19, they cut the rates, then we can most probably see the pound in much lower levels. That's what's happened. If look what's happening in the banks and the market, market reaction, looking very shortly on other markets, gold and silver, both of them, they are still under pressure. But in a bigger picture, if you look at a bigger picture, you can say that both of them they are still positive and gaining. Don't forget, Mr. Wash nomination, it was one of the reasons that we saw the pressure on the safe havens, especially in the gold and the silver, especially on that too, well, market. But a market is on a bigger, in a bigger picture still, it's going to take back the levels that they had at the beginning of 2026. So in the mid market, just like for a short term or maybe in the midterm, we can expect this side movement maybe with a slight downward tendency, but in a bigger picture, uptrend will start soon, right after that, and we will see 5,600 and 700 in the second half of the year. Same about $100 for the silver. That's for the metals. As for energy market, slightly like lower intentions in tomorrow's meeting maybe supported the downtrend on the just like slightly lowering the price in the oil market, even though this hot current price of the $63.20 is so high for the oil in the current situation. While the stock market's lowering, the oil price also should follow this downtrend, which is following right now. But generally, with the oversupply in the market, the oil price should be around $55, $56. And looking at the price seeing the price at $63, it means that the price is so high and the current levels are much higher levels than what it's supposed to be. As for the cryptocurrency market, the Bitcoin is following the overall tech-based companies, on which they are all, most of them they are negative. Bitcoin also is falling under 70,000, much lower than the days. Next target that looking at trading is 69,700. The next target will be around 65,000 US dollar. Yep, that's what's happening in the market. What was the central bank's decision and overall market reactions. Hope it was useful for you. Talk to you again soon. Have a good time. Bye.